Hey guys, what is going on? Today I wanted to share with you overall economics and stock news updates on 5 company stocks I believe have the potential to make significant bullish runs, in fact, positive return on investment in this quarter of 2023. Now, if you're new to this channel, all I see is W. I'd really appreciate you providing some love, subscribing, and hitting the like to this video. I would really appreciate it. Now, anytime when you do make an investment decision, whether it's in stocks or cryptocurrency, please always take my information as guidance and do your research. It's very important for you to do so. Let's get started, guys. Now, overall, with how we see the economy, the stock market, S&P is now hovering at like 4,400. We know that the prior year, back in 2022, the stock market has been just bleeding out. However, on average, we know that when a recession occurs, on average, the recession will continue for about a year and a half. We're right at that point, right? We're a little less than a year and a half, and this explains based on data points that we've collected throughout the many years. Uh, we're expecting to see an upward trajectory, and that's why now we're seeing a bounce back. The prior resistance of S&P was at like 4,800. We're 400 points away, at least for the S&P performance currently. So this is looking very positive, and while a lot of people had lost a lot of money just with the prior year and beginning of January, February, we're beginning to see bullish returns now. And this is why I wanted to share with you current stocks to monitor and whether these stocks are actually buys. First stock I wanted to share with you is Zomedica. This ticker goes by ZOM. This is a company that's more so in the veterinarian space, providing products for veterinarians to detect whether animals have thyroid related problems. We know that at one point, a couple years ago, Zomedica just ran all the way up to about like $2.50 from a basement low price, and it's been just consistently on the basement low, now hovering at like the sub 20 cents, currently at 22.97 cents. Its 52-week range 15 cents, 41 cents 52-week range. The volume has been picking up, right? We see here currently shares of volume traded is at 9 million. I suspect that Zomedica will start picking up its price performance in terms of share price. I believe that in this quarter, Q4, we're suspecting to see about a breakthrough. I'm thinking that in this quarter, we may see a run up to about 60 cents at a minimum. It may run up even more, but once this goes running, people are going to flow in. So I really, would recommend just monitoring this company. If you have high conviction in what Zomedica is doing, I wouldn't miss the boat with this one. But that's my perspective I wanted to share with you. Next company I wanted to share with you is the infamous C3.ai. This ticker has been just doing so well, and why is that the case? From a technical standpoint, any AI related stock is going to just blast off, and now that we know artificial intelligence is the name of the game right now with like chat GPT now in play, companies like C3.ai is only going to continue to grow. I think of this company similar to like AMD and Nvidia back when it was like at like $4, $12, and it's now like above the $100 range. There's no reason for C3.ai not to reach triple digits in terms of its share price from a long-term perspective. So I definitely think that there's still value here. I was recommending this company back when it was like at $10, which wasn't too long ago. Several months back. I mean, back in January, it was like $13 here. It's run up quite a bit, but that doesn't mean that it's going to stop here, right? Because what they're doing is they're enabling all different sectors to leverage their programs to develop AI related programs, technology all around different sectors, whether it's in the financial market, in operations, in engineering, or even in healthcare. And this Redwood City based California company is only going to continue to grow. And I believe that triple digits in terms of its share price is coming very quickly. Next company I wanted to share with you is a company that's in the electric vehicle space, and that is Lucid. This is a competitor, or I should say a future competitor of Tesla, to potentially gain market share from the biggest competitor right now, which would be Tesla. While we know Tesla is taking a lot of the market shares, that doesn't mean that Lucid will not have room to eat. We do recognize that Lucid does not have a significant amount of sales right now. Its revenue is much lower than that of Tesla, but that doesn't mean that this company, with its strategy and vision, doesn't mean that it will not expand over the global markets. In fact, there's displays all around the world. Lucid has car vehicles priced at around 100,000 to 150,000. In fact, they're planning on getting into the SUV space in 2024, as well as launching new electric vehicle models that would cater towards customers that have the propensity to spend about $50,000 in terms of the price per car. So definitely taking on Tesla as a competitor. But I think from a technical standpoint, Lucid is actually doing pretty well. I mean, today it's gone up here. The volume has been picking up by double here. If we scale back 6 month trajectory, I mean, back in June, this was like at, $5, and it quickly just ran up by about 60%. January, it was at a low point, and it ran all the way up to about $18 when there was news around Saudi Arabia public investment firm potentially buying out Lucid. Currently, Saudi Arabia has increased the share ownership from 60 to 65%. So I believe that Lucid won't go out of business. They'll continue to get the backing from the king rich country Saudi Arabia. So that's not a concern, because there's plans to go EV in the global markets, right? Not just the United States. So there's potential there. And from a technical standpoint, I believe that Lucid is still undervalued, right? We scale back here. This was running at $53. Yes, we do recognize this is hindsight, but what goes down will eventually go back up through patience. So that's that with Lucid. Next company I wanted to share with you is a crypto related stock, and that is Marathon Digital Holdings, ticker MARA. Today it went up by about 3%. Volume has been steadily increasing. In fact, the charts have been looking very bullish. If we scale back 6 months here, I mean, this was back close to about like $3, and now it's gone up to about $17. However, if you scale back even further, at one point this was hovering above the $50 range. While Bitcoin price continues to rise, right? It once reached 70,000 per coin, and now breaking the 30,000 per coin of Bitcoin. I definitely think it's positively correlated with the increase in cryptocurrency. And if you're a firm believer that the price of Bitcoin will continue to go up, there will be dependencies for companies like Mara with an increased demand, because Mara is a company that's focused on mining for Bitcoin. And with the price of Bitcoin going up, that's going to offset the operational expense. And with Mara expanding its throughput, I believe that this $3 billion market cap company will continue to go up. I'm forecasting that the prior resistance can be broken in Q3, Q4 alone, and the sky's the limit with Mara. Now, the next company stock I wanted to share with you that's similar to Mara is Riot Platforms, ticker RIOT. In fact, Riot did quite well today, gaining close to about 4%. Volume has been steadily picking up as well. Similar bullish pattern signals that we're seeing from an intraday trading perspective. As we scale back here, this was hovering at like $5 back in March, and look at it now, it's gone up quite significantly. However, from a long-term perspective, back from 2021 during the COVID-related peak days, this was hovering above $50. Now, most of you are wondering whether Riot is a better buy or is Mara a better buy? That's very difficult to really assess. But when you compare the two, while Riot Platforms has a bigger market cap and with higher throughput in terms of mining for Bitcoin, Mara is a force not to reckon with. Overall, I would say that Riot has lower risks from my perspective, and Mara has a higher risk, higher type of reward play from my perspective. Uh, if you are not able to determine which stock is better, perhaps going in with half and half, 60-40, 80-20 split, or going with one that you have higher conviction with. But from a share price standpoint, I definitely do think that there's still room for growth here, especially with the high risk of the price going down significantly. There's always going to be the higher reward. So Riot Platforms, I believe, is one stock not to ignore as well. So there you have it. These are the 5 stocks I wanted to share with you. If you enjoyed this video, please make sure to hit the like, subscribe to All I See Is W, and please make sure to leave your comments and questions down below. Thank you, guys.